with money.
Absolutely. Hostility around the globe, geopolitical risk in focus, from the deadly plane crash in Ukraine to the invasion of Gaza. We want to bring you up to speed on the very latest, starting with Malaysian Airlines Flight 17. Speaking a short time ago, President Obama calling for a credible international investigation and an immediate ceasefire in the region, and for the first time, the president confirming that at least one American was on board that flight. FBI and NTSB investigators are en route to the scene, and so far preliminarily U.S. intelligence assessment indicate that the plane was blown up by a missile fired by a pro-Russian separatist. And as many as 100 people were on board were AIDS researchers en route to a conference. Now to the Middle East, where Israel is warning it is ready for a, quote, significant expansion of its ground offensive. Its troops are pushing deeper into Gaza to destroy rocket launching sites and tunnels. The Israeli advance follows 10 straight days of attacks. The markets regaining their composure, shrugging this off. The Dow just about 50 points shy from wiping out yesterday's triple-digit loss. At what point does all of this global turmoil begin to derail the market? Here now, Peter Schiff, CEO of Euro Pacific Capital. We have Scott Martin also with us, United Advisors Chief Market Strategist. He's also a Fox News contributor. Peter, I want to start with you. Has the Fed made the market complacent to all of these hotspots around the world which are catching fire?
Yeah, I don't think that any of these hot spots are going to be the pin that pricks this bubble. I think what Americans really have to worry about, at least from the perspective of an investor, is not what the Russian separatists are doing in the Ukraine, but what Janet Yellen and her cohorts are doing at the Federal Reserve, because far more damage is being inflicted now on the U.S. economy and will be inflicted on investors by the Federal Reserve. Scott,
do you agree with that? I mean, do you look at everything that's happening around the world and think that the market is shrugging it off too easily?
Well, it's nice to see, I'll tell you that much. I don't know if it's too easily or too hardly, but Melissa, to Peter's point, I don't think the damage is totally being done by the Fed here. I mean, one of the other issues that the Fed is really fighting against, frankly, they have an inflation mandate. They want to get above 2%. They want to see price stability. They want to see maximum employment. The reason they're not seeing any of those things, guys, is they're printing tons of money, but there's no money velocity. The money's not going through the economy like it has in decades or even years past. That's the one fight the Fed is not winning here. That's doing more damage than the Fed's actions is doing, Peter.
First of all, when did the Fed get a mandate to make sure inflation is above 2%? To me, their mandate is to preserve the value of the dollar, price stability, not rising prices. But I would disagree. I think prices are rising quite a bit faster than 2% a year already if the Fed would just open its eyes and look. But one of the reasons that it's not even higher is because we're exporting it to our trading partners. Look at all the bonds that China and emerging markets have been buying since the Fed started tapering. In fact, foreign central banks are buying more bonds now. They're more than picking up the slack for the Fed. And that's what's really keeping the wolves at bay right now.
The market is acting like all of these things that's happening around the globe, whether you look at the Middle East, you look what's going on in Russia, you look at how much it feels like our own government is not having an impact on foreign policy around the world, and it shrugs it off as if there is no impact of all of that on all of our money. And do you agree that there's no impact on our money? It seems so implausible. Go ahead, Scott.
Well, Melissa, the thing is that if you look around the globe, I mean, you mentioned all the conflicts that are out there. The safe assets are here in the U.S. of A., whether it is stocks, whether it is bonds, multinational. Peter, you're laughing, but I'm telling you, the market is disagreeing with you.
Because there's no safety in those assets.
Go ahead, Peter.
Oh, come on, Peter. Wait a second. If
the only danger here...
Go ahead, Peter, and then Scott, you can respond.
The danger here is that Obama overreacts and tries to flex muscle that the U.S. no longer has, and we further irritate our allies in Europe. I mean, the United States right now is going around the world pissing off all the people that it needs to be sucking up to, all the people that we're borrowing money from, that we're counting on maintaining the dollar as a reserve currency. If they don't want to do that anymore because they're tired of the fines and they're tired of our arrogance,
Scott, go ahead, respond to that.
We're going to have to deal with the consequences.
We don't need to suck up to anybody. We're the world's biggest shopper. The world's reserve currency is the dollar. Nobody can get past that right now. But there's no way.
But they're loading us with money.
Hang on. Peter, let Scott finish. Go ahead, Scott.
Yeah.
There's no way we should be going over and kissing Vladimir Putin's butt or Angela Merkel's butt and telling him, hey, we're sorry, we didn't mean to do this. No way. The economy needs us. The global economy marketplace needs the U.S.
No.
U.S. stocks have been the best game in town. Bonds haven't been bad either.
Peter, last word to you, then we got to go real quick.
They need us like a hole in the head. We need them. The problem is when they figure it out, it's going to be too late for the investors that aren't paying attention now.
China and Japan
I think that bell behind you is tolling for us.
In the United States.
We got to go.
Our own debt. That's not a good story.
All right. Thanks, gentlemen.